Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. We have big event tomorrow, right? Everybody's been talking about the inflation readout, and that will be before the open at 8:30 a.m. Eastern Time. Now, this is going to be closely watched. It's going to be closely scrutinized, and it's going to be talked about for probably the next month or so, because I mean, like, this is what the Fed is focused on. This is what's going to determine interest rate policy. So I mean, it's going to be a high impact catalyst, and things could be volatile after these numbers come out. Um, this setup is different than the last couple months. Some of the inputs for inflation have been easing, right? And that's given people more, maybe more encouragement to add to some like risk, right? Or like bid stocks up a bit. Like the whole idea of like the Fed maybe pausing, or you got some people talking about pivoting, right? It comes from the idea that inflation has peaked, and that the Fed won't need to be as aggressive moving rates because a lot of like the inflation inputs are starting to roll over. Okay, so we have had a very big bounce. The Q's tech is now well above where it was going into the June CPI reading. That was the June CPI. This was the Thursday before, and then after the Friday CPI reading, we were down here. But you can see that, I mean, we've had like a really significant bounce, taking back like a lot of what we lost over the last few months. And I mean, some of this was due to like people seeing like energy rolling over, right? Starting to say like, okay, this month's CPI should not be as bad as the last one, so that gives them some, some encouragement that maybe we are past like the peak of inflation. Okay, so that's why people are really going to be closely scrutinizing this, because right now they're looking for an 8.7% CPI number, and if it does end up being in the nine handle and being even greater than last month, that's probably going to be a pretty big negative surprise, because people are starting to be more optimistic that the number should be a little bit cooler. Okay, so um, in terms of like the overall setup, for tomorrow, the Qs are pricing in about $6 or so, about 6 points, and then the Friday expiration straddle. So that's two extra sessions after tomorrow is pricing in about 8 points. I'd say that, like, somebody asked like, how do I feel about it? I feel like it's fair. Last month, there really wasn't a huge reaction to the CPI, even though it did come in way above what was expected. We ended up moving, top to bottom that session a little over $6. So that was here. That was on this day. So last month, CPI did move us about 6 points. The price in about 6 points for tomorrow. So basically, kind of in line with last month. I mean, June, different story. We were down a lot, and then we continued to drop further. So I mean, Wednesday expiration versus Friday. I'd say Friday to me seems more interesting, right? Because you're pricing in six for tomorrow. That means that basically for two extra sessions of trading, Thursday and Friday, you're only paying $2, right? So six for Wednesday expiration, 8 for Friday expiration. Maybe you don't get a huge move tomorrow, but two extra trading days where our average daily trading range is anywhere from like 4 to 5 points lately. To me that seems like a more reasonable pricing. So in terms of Wednesday versus Friday, it does seem like Friday may be the more interesting of the two contracts. Um, SPY technically is a little bit more interesting too than Qs. Qs to me seem a little bit extended. Spiders a little bit less so, because they've been kind of chopping and spinning around the 100-day. And what's interesting is that it actually is basically right at the same spot it was at heading into the June CPI, right? So this was like pre-June CPI, post-June CPI, pre pre-August CPI, right? Basically right at the exact same spot, with the 100-day now being in play. So I mean, of the two, like Q versus SPY, SPY seems the more interesting technical setup. And what's also interesting is that options are actually priced lower. So the straddle for tomorrow on the SPY is pricing in about 5 points. And the straddle that expires on Friday is pricing in about 7 points. So six to eight, 6 versus 8 on the Qs for Friday, Wednesday versus Friday, and then 5 versus 7 for the SPY Wednesday versus Friday expiration. So um, to me, it's more of a wait and see. I feel like after the run we've had and kind of how the positioning leans, I feel like I'd rather see what the number is, see how these things open, and then maybe go from there. Because I mean we have had even if you did miss like the first initial move of the CPI, right? So if you missed the first move, there was still plenty of downside follow through after, right? And actually um, in July post CPI, right? We got hit, but then bounced, and then after the bounce, I mean, it just went on like a crazy run. So um, I'm not necessarily worried about missing the first move, because if the first move gives some clarity and really sets the tone for direction, then I think there's going to be plenty of opportunity. So that's how I'm looking at it. That's what I see, and then we'll just wait and hear the numbers, see where things open, and then go from there. Okay. If you like this video and you're looking for more information about trading these events with options, please follow up with the link in the description of the video for more information on options and play. Have a great night. Stay well. Best of luck if you're playing anything for the CPI reading tomorrow, and I will talk to you tomorrow.